Hey, so Goku, thanks for the trip, man. I really needed this. It's been really hard at the office and I just wanted to, come by and say thanks. Okay, one more thing. So, you know how I was in charge of the bags? Well, one of the sleeping bags went missing and I talked to the rest of the people and they don't have any spares or any sheets. So either you sleep outside tonight or we're gonna have to do rock, paper, scissors on who's the little spoon. That's 4 out of 7. 5 out of 9. How are you so good at rock, paper, scissors? All right, man, you win. Let's go make some s'mores. Hey guys, welcome back to After Hours. I'm the A-Tail Beast, and today we're gonna talk about the typical trader. Now, before we get into that, let's talk about what happened this week. When we think about penny stocks this week, we have to understand that nothing was ideal. Now, when I say nothing was ideal, that means that there was opportunity, there was volume, there was even plays that popped up with certain catalysts. Things even went up over 500%. But if you look at the criteria, if you look for the A+ setup, none of those were available. Now, what did we see this week that amounted to nothing? You probably saw CCG, which went from $20 all the way up to $200.
This was the overall message for this week. This week, the market said, do not short me. If you short me, you will be put in a trap. Now, short traps are all over the place. There were several levels that were filled with shorts. Now, these shorts were not the patient shorts. They were the impatient shorts. They were the newbie shorts. And that's why they gave them a short squeeze souffle.
When we talk about short squeezes, we want to look at MLGO. Now, MLGO, this ticker had 100 million resistance, somewhere around $3. Now, that resistance didn't matter because it was a canceled resistance. Now, that resistance was somewhere back in February. And now, fast forward, it's September. Now in September, this stock went up 5, maybe even 6 days in a row. When this went up each day, step by step, just a tiny bit, we call that a slow grind. Now that slow grind happened on the daily chart. Now, any type of bag holder that will form a resistance pretty much doesn't exist anymore, because they had plenty of opportunity to get out of any trade that they regretted doing in February. Now remember, the concept behind resistance and bag holders is that the stock moves way too fast for people to get a decent entry. They don't have solid risk management like me and you. But at the end of the day, when it comes to those slow grinds, it gives plenty of opportunities for bag holders to get out of the stock. And when we look on the daily chart, we understand that swing traders look on that chart and they're looking for a continuation the next day. When we look at the peak of that 100 million resistance and compared it to the last green day on MLGO, in the pre-market, a lot of people believe that that resistance was still in effect. And we know that a lot of people ended up shorting this stock because when it hit that resistance high, we saw a pullback inside of the pre-market. Now that pullback, it lasted just a little bit of time because it consolidated and formed an ABCD pattern. What you need to know is that this meant lower highs, and these lower highs made a support inside of the pre-market. Now, some of the impatient shorts, they were paid this week. There was a quick drop at the open and you made a little money. The stubborn short sellers were punished in the last hour of the day. So when it comes to trading inside of the US market, we understand that trading at 11 a.m. to 3 p.m. Eastern time is a dangerous time. There is no rhyme or reason. All you do know is that volume slows down and then it comes back into the market, or the volume speeds up and then it just disappears into the market. But it's always at the last hour of the day and the first 5 minutes of the day. We know that it's institutions trading in the last hour as well as the first 5 minutes. That shows the overall direction of the stock because the open as well as the close are controlled by institutions. When we look for volume and volatility in these stocks, we have to understand there is a trend, and this trend is pretty much determined beforehand. And the trend that we saw in MLGO was going up.
What you really need to know is that this had 100 million resistance back in February. Now that 100 million resistance back in February, it pretty much got slow grinded. If you look on the daily, there is several green days leading up to 350, and it happened twice. Around that point, a lot of people are looking at that resistance high. And when we go past that on the daily, especially when there's a subtle sign in the pre-market, and at that point, there's going to be a breakout. And when we talk about breakouts, we're talking about double, sometimes even triple. Now, if we look all the way back to this date on February, now if we triple that, that's somewhere around $10. And everyone was expecting at least $7. Fast forward to this week, we saw the stock in the pre-market went all the way up to $6. And that's because it did a pre-market breakout. Now, this pre-market breakout, it happened in waves. Now, we already knew that something bad was going to happen because the day before, on the smallest amount of volume, we already went past the 100 million. And we already had the idea that those two slow grinds pretty much canceled that 100 million. And maybe there's a delayed reaction to the resistance. So this week was clearly for the buyers, not the shorts.
If you did make money this week, congrats to you. But let me know in the comments, was it luck, trade selection, or risk management? Now, other than MLGO, there were other plays. Now, these plays, they were punishing shorts, like AVGR. This stock, several times, a lot of people thought, I'm going to short it. Then it squeezed at the end of the day, or it dumped in the morning. Now, when we talk about the longs had a lot of opportunity this week. We saw the breakout on MLGO. We saw a lot of other stocks go up 1,000%, like CCG. You even had the massive volatility and short squeezes and short traps on AVGR and a few other tickers this week. So for me personally, this week has not been busy because I have not shorted. I stopped at the first step, trade selection. Now, a lot of the trades that were offered this week, they gave opportunities because the stocks I'm talking about, like CCG and a few others, they're all nano-caps. This means it's below 100 million. And it's even more dangerous when it's below 500K. When we talk about stocks like CCG that have around 100K float, we have to understand that they can be hit with a T12 halt. And we talked about that in a previous video. I sat on my hands this week and I'm looking forward to next week. All right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.